Market news now. Stocks in Asia rallied this morning, putting the region's equities on course to snap 5 days of declines after U.S. shares climbed on improved consumer confidence and better than expected earnings. The biggest moves were in Hong Kong, where the benchmark index rose about 3%. When it comes to China, the market remains wary given a surge of infections in Shanghai and concerns in Beijing earlier in the week amid reports of crematoriums being overwhelmed with bodies. Meanwhile, traders will continue to contend with additional data this week. In the U.S., real GDP for the third quarter is likely to be revised down and could be flat in the fourth quarter. Tomorrow's data, such as U.S. consumer income, new home sales, as well as the University of Michigan's consumer sentiment, will give investors more insight on consumer spending. Meanwhile, we're now going to be looking at what to expect for 2023. Over the past week, we've been talking to a whole host of chief investment officers, starting off with Ashburton Investments. But in this particular interview that we're going to be playing for you, we're going to be talking to somebody from the Eskom Pension Fund. And that's because there's been no shortage of market drama this year. The breathtaking returns that were fueled by post-COVID enthusiasm have been drained from stocks as a bear market has taken hold. And with the global economy hit by multiple adverse shocks from supply and demand issues spilling into labor markets and a third major wave of COVID-19 to Russia's invasion of Ukraine. And it's within this background that the Eskom Pension and Provident Fund maintained a 30% allocation to offshore assets, and the fund was slightly overweight in South African equities. I spoke to the fund's Deputy Chief Investment Officer about his investment strategy for 2022 and his expectations for 2023. That was Patujetsu Mabogo, the Deputy CIO.
We also did private credit in Africa, or we've launched it. We haven't exactly invested yet. That was set up to solve a couple of problems, really. We've been on the continent for a while, and we've struggled with exits and currency depreciation. So the private credit denominated in US dollar and euros, we felt that would take care of those problems, and that's something that we have launched. So it will get going very soon. And lastly, on the social side, we launched SME debt fund alongside Sanlam to support small businesses. And given the worsening economic condition, I think we're quite glad we did that. And hopefully in the future, if it works out well, we'll do a bigger slice for SMEs. So in short, we didn't make many changes apart from the infrastructure.
When you look back in the year that was, what surprised you the most? Because, I mean, between the Russia invasion of Ukraine, persistent inflation, what surprised you?
So there's a few things. There's quite a lot, actually. I think that everyone's talking about inflation, and that's because it was a big surprise. Inflation itself is not a surprise, but the magnitude was unexpected. I think we were expecting it, but to get to a level of a number that's almost as the highest we've seen in almost 2 decades was quite surprising, and that's affected a lot of things. We have absolute targets indexed to inflation, for example. It affects day-to-day activities. Second one, I think the China zero COVID policy has been a surprise. It has always existed, but I didn't think it would last this long, and it'd be interesting to see how much longer they maintain it. On the positive side, I think the JSE doing as well as it did, it's not stellar, but it's just better than some of us expected, especially when you compare to some of its global peers. But the next one I have to say, the collapse of crypto. And this is just getting worse and worse as the year, towards the end of the year. Of course, as a pension fund, crypto is not something we would invest in. But as an asset class that aims to disrupt traditional financial institutions, you would have to say the latest events do nothing for the legitimacy of crypto as an asset class. So that's interesting. And lastly, I'd have to say the continued pace of delistings on the JSE. Once again, something that has been happening, but I just get the sense that it's picking up pace, and losing 15, 20, 30 companies a year from our starting base this year is a big percentage. So that's quite a surprise, and hopefully that's something that can be fixed going forward.
So quite a lot of themes running through 2022. Which of those, if you had to pick one or two, do you believe will still be with us going into 2023 and possibly be a risk?
So, look, I'd have to say the key things from 2022, commodities, definitely. I think coal, crude oil, nickel, and even maize had a very eventful time in 2022. I'm not sure that will continue, to answer your question. Value investing was quite popular, I suppose, to be expected with increasing interest rates. Banks, energy companies had a very good run. Banks, for example, I think probably maybe not as well next year. They may run out of steam as interest rates start to come down. Regulation, I think big decisions made in 2022, especially for us as a pension fund. So raising the limit for infrastructure, raising the limit for offshore allocations, and the two-pot system, which is not quite effective yet. I think there was a lot going on from the regulators. What I think will carry on into 2023 is I expect to see just as much volatility. I think there's still quite a lot of things up in the air, so it's very difficult to make concrete forecasts at this point. What I do look forward to finally happening in 2023 is hopefully the point I was making earlier about infrastructure and the type of activity we're trying to do in that space. I'm hoping that it does finally take off. It's something we're hoping for as a pension fund, but I think it's also something we need as a country. I think that the latest developments are quite encouraging. The green hydrogen program announced a couple of weeks back, and the pipeline of projects identified. I think I'm encouraged, and I think there'll be a lot more activity around renewable energy and investments and jobs.
Yeah.
Lastly, inflation. We've been talking about inflation for a while. It looks like it's coming down, but it probably isn't going to come down as quickly as we would like. But I look forward to lower inflation next year, and that should be a good time for income-producing assets like bonds, hopefully. And hopefully we can go back to focusing on earnings and growth when we evaluate companies, as opposed to just inflation and interest rates.
That was Patujetso Mabogo, who is the Deputy Chief Investment Officer for the Eskom Pension and Provident Fund, talking to us about the year that was, but also throwing forward in terms of what his expectations are for stocks and inflation.